Have you ever felt a storm brewing before the first drop of rain? What if a colossal $22.12 trillion signal just flashed across the financial world, hinting at a seismic shift for crypto, but not in the way you might expect? A shadow has fallen over the crypto landscape, a predictable yet unsettling chill as the markets continue their descent. We're seeing red across the board. XRP is down, Bitcoin is bleeding, Ethereum is faltering, and Solana is struggling to hold its ground. With the exception of a few defiant outliers, the entire digital asset space is caught in a downdraft. The last 24 hours have been a masterclass in market psychology, a tense quiet before the inflation numbers were released, followed by a sharp, deceptive spike, and then an unforgiving sell-off. It was a strange, almost surreal trading day, but perhaps not so strange when you remember what day it is. It's Freaky Friday, and as the name suggests, things have a tendency to get weird, exceptionally weird. The current market pulse is weak. XRP has tumbled 5.5%, now hovering precariously at the 2.80 mark. Bitcoin, the market's titan, has slipped to 108,389, continuing its slow downward slide ever since the 1348 EMA indicator flashed a clear sell signal. It's a steady, relentless trickle, a slow bleed that's pulling everything else down with it. While Ethereum manages to cling to the $4,000 level and Solana holds above 200, it's undeniably Bitcoin playing the role of the party pooper, casting a long shadow over the entire crypto sphere. The charts are a sea of red, but the negativity wasn't confined to crypto. The stock market, fresh off its all-time highs from yesterday, decided to pull back, reminding everyone that gravity always wins. The VIX, the market's fear gauge, which was eerily low, suddenly sprang back to life. This pullback has a familiar rhythm, especially when you consider the calendar. For those in the US, it's Labor Day weekend, a time when many traders are on vacation, squeezing out the last drops of summer before school bells ring. It's a period of low volume and often high volatility. A faint memory surfaces of a similar pattern last year, a sell-off leading into this very same long weekend. Back then, XRP was a different beast, trading around 40 or 50 cents, but the broader market sentiment feels eerily reminiscent. With the stock market closed on Monday, traders are de-risking ahead of the extended break. It's a classic end-of-month, end-of-week scenario where option contracts expire and market makers hedge their bets, contributing to the downward pressure. Freaky Friday strikes again. Then came the data. The market was bracing for the PCE inflation report, the Federal Reserve's preferred gauge of rising prices, and it arrived exactly as expected. Inflation rose to 2.6%, perfectly in line with forecasts, while core PCE climbed to 2.9%. No surprises there, yet this marks the highest inflation level we've seen since February of 2025. So, we're in a strange paradox. Rate cuts are supposedly on the horizon, but inflation is ticking upwards. Market probabilities for a rate cut remain high at over 84%, but the initial reaction was a whirlwind of confusion. In the first few moments after the data release, XRP, along with Bitcoin, actually jumped, surging to 291. The algos seemed to read in line with expectations as a positive. But then, just as quickly, the mood soured. The market began to digest the reality. Even if the Fed cuts rates, rising inflation is a toxic cocktail for the economy. Just as this realization settled in, another piece of unsettling news emerged from the north. Canada's economy unexpectedly contracted, shrinking by 1.6% in the second quarter, the most significant drop since the pandemic. This 1-2 punch of persistent U.S. inflation and a faltering Canadian economy seemed to be the catalyst that tipped the scales. The combination of these two factors ignited the sell-off we witnessed, turning an already cautious Friday into a full-blown retreat. It's this day-to-day noise that can be so deceptive. A few weeks ago, a poor PPI report triggered a similar market reaction, a moment of hope followed by a sharp decline. It feels like we're caught in a loop of optimistic data points being instantly negated by a pessimistic reality. Now, a critical warning sign is flashing for XRP. The 1348 EMA, a powerful technical indicator, is on the verge of a bearish crossover. This could trigger a sell signal, the first one since early June. Bitcoin has already received its signal, but Ethereum and Solana have managed to keep their distance from this bearish precipice. XRP, however, is right on the edge, at risk of a technical breakdown that could dictate its trajectory for the coming days and weeks. The market is a fickle beast. Its reaction today could be completely forgotten by Monday. This is why I will never tell you what to do. The future is unwritten, the data is unpredictable, and the market's reaction is a mystery. Always do your own research. Your financial destiny is in your hands alone. But let's pull back from the short-term chaos and look at the bigger picture. At that colossal number I mentioned earlier, $22.12 trillion. The US M2 money supply, which is the total amount of money in circulation, surged by 4.8% year over year in July, hitting that record high. This isn't a one-off event. It's the 21st consecutive month of increases. The rate of this expansion is accelerating, a stark contrast to the modest 1.6% rise seen in July of 2024. To put it in perspective, the long-term average growth rate is 6.3%, much of which was fueled by the pandemic-era money printing. As this river of cash floods the system, the purchasing power of the US dollar continues to erode. This phenomenon isn't isolated to the US. China is printing money at a similar pace. Historically, there has been a powerful correlation between the growth of the M2 money supply and the crypto market. While there has been a recent detachment, these divergences have happened before, only for the two to snap back into correlation with a vengeance. So while the immediate future looks grim, this ever-expanding ocean of liquidity could be the tide that eventually lifts all crypto boats. This brings us to what some are calling the crypto waiting room. It feels as though many key components of the crypto ecosystem are coiled like a spring, ready to launch. If you look at the total market cap of altcoins, excluding Bitcoin and Ethereum, it appears to be on the cusp of a major breakout. The chart for smaller altcoins, those outside the top 10, shows a similar though less immediate potential. This sets the stage for a fascinating autumn. Historically, August and September have been brutal months for crypto, a sort of final washout before the historically bullish months of October and November. Are we now in the final phase of this painful consolidation? Some see this as a period of pain, while others see it as a generational opportunity. It's all a matter of perspective. Do you prefer to buy when the streets are filled with blood, or when the parade is already in full swing? The latter, the banana zone of a parabolic bull run, is exhilarating but treacherous. It's incredibly difficult to sell when euphoria is at its peak, and most people end up riding the wave all the way up, and then all the way back down. Perhaps this cycle will be different, but it's wise to be prepared for every possibility. As one analyst, Alex, put it, nobody can predict this market. Anyone who claims they can is selling you snake oil. His gut tells him Bitcoin might see one more dip below 100K, and Ethereum could tap $3,700. But in the grand scheme, it's irrelevant. The larger trend, he believes, is undeniably upward. We are in a state of profound uncertainty, a delicate balance between a potential final downturn and the start of an explosive new chapter.